What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So I was pretty convinced in my last video on the Macroeconomic channel that what we were seeing was simply a bull market shakeout in the form of a bullish falling wedge. This is exactly what has been playing out so far, now that we got our breakout from the wedge. We even have a small retest so far, and just have to hope that Bitcoin won't try to retest it again. The bounce zone is exactly the area we have been talking about for a while. You can clearly see how the previous half-year resistance zone has now turned into strong support with these multiple bounces. It is also in perfect confluence with the 20-week moving average, which is providing further support. Now, the 20-week moving average has been violated a lot of times this cycle due to the overall slower growth that Bitcoin is experiencing in general, but it would be great to launch off of this support level this time, especially considering the time crunch Bitcoin has now found itself in. I do believe the sentiment has recently become sufficiently negative for a bullish trend reversal, with people cursing Bitcoin's disappointing growth this cycle, at least so far. After all, just about everything else is putting in new highs while Bitcoin is looking sad and depressed. At the same time, people, especially dopamine-addicted Bitcoiners, also have a massive recency bias, and the recent all-time high of 124k is all but forgotten. Now, let's look at our other indicators to find some more clarity. We're currently stuck in a range, as you can see, so it makes sense that we have liquidity on both sides of the trade right now. Tapped into this 110k area, which is the logical support area. And we also have some liquidity on top of us at around 111,000. When looking at longer term liquidity, then you can see that there's some actually at like 89,000 or so, but hopefully we won't end up retesting that. Now let's look at the DXY versus Bitcoin. So nothing really has changed here over the past few weeks or so. The dollar is still stabilizing here, and so is Bitcoin toward the bottom. And you can clearly see the inverse correlation. But I do believe that Bitcoin will eventually reverse over here, and the dollar will also continue its downtrend to at least the low 90s or so. When looking at the CME chart, then you can still see that there's technically a gap over here because this candle closed at 116 and the next candle opened down at around 114. And this will obviously be filled if we reverse the trend, and this isn't the beginning of the bear market. Otherwise, we're pretty cooked. Now, we have to address the big story because there are some pretty bad things going on with the jobs market. As you can see, unemployed Americans outnumber job openings for the first time since April 2021. So the US reported 7.24 million unemployed people in July and 7.18 million job openings. And this is a big shift in the trend. Powell is probably feeling pretty uneasy right now because he was trying to keep the interest rates high for as long as possible to cool down the inflation, but it's now very much possible that he overdid it, which is what Trump has been warning us about for quite a while. So Trump is not happy with him, and now theoretically he could be proven right on this matter. So Powell is not very happy right now. This stupid game of trying to balance the inflation rate and the economy that the Fed plays is a very fine balancing act, and it's almost impossible to get it right. So it's very much possible that we will be moving toward that 5% target, which would indicate a possible recession. So we have to keep an eye on that. The good thing is that this is usually quite a delayed thing, and it's still completely viable for Bitcoin to rally for the next, let's say, before that happens. So we just have to keep an eye on this over here. As you can see, almost every rate cut cycle has produced a recession with a few exceptions. So we have to hope that this is an exception, right? The potential recession could happen early next year, for example. That would still give us some time right now. But it's clear that this Federal Reserve rate will be dropping quite fast here over the next few months because things are not looking very good at all right now. Now, let's look at some news. For our first piece of news, we have Bitcoin ETFs catching up to gold ETFs at a mind-boggling rate. Despite the fact that gold has been performing really well recently and climbed all the way from 2,500 to 3,600 over the past year, the difference in value of assets under ETF management between both gold and Bitcoin is still getting smaller and smaller. Bitcoin ETFs now hold nearly $160 billion in assets under management, almost reaching parity with gold ETFs, which total approximately $180 billion. And consider the fact that central banks have been doing a lot of the heavy lifting behind gold's price surge. I don't even understand why anybody would own gold ETFs instead of the real thing, except for cases where it's really impractical or impossible. The same goes for Bitcoin, though, where ETFs provide even less convenience compared to just holding real sats. I do own some physical gold and silver and like precious metals in general, but I still know that Bitcoin is a substantial upgrade in almost every conceivable way. The most important difference is the fact that Bitcoin's supply is hard capped, while we keep digging up new gold every year. So, my prediction is this: Bitcoin ETFs will end up overtaking gold ETFs pretty soon, and even the market cap will eventually overtake gold's, but that will probably take more than 10 years considering the more than 10x market cap difference between 2.2 and 24 trillion. Both assets will continue growing in value as the dollar gets more and more debased, but Bitcoin will obviously grow much faster. Bitcoin will also slowly overtake gold's role as a safe haven instead of just a speculative investment. Now, for our next and final piece of news, we have the ongoing legislative crypto payments revolution from Project Crypto to the Genius Act, thanks to the crypto-friendly US administration. The recently enacted Genius Act is setting a stringent federal and state regulatory framework for stablecoins, requiring full reserve backing, audited transparency, and AML compliance. Giants like JP Morgan, Wells Fargo, Visa, and MasterCard are already integrating stablecoins into their operations, and daily stablecoin transaction volume has surged to $30 billion. Project Crypto is also gaining steam. The US Securities and Exchange Commission released a major regulatory agenda proposing clearer rules for digital asset offerings, exemptions, and safe harbors. The plan also considers allowing crypto trading on traditional securities exchanges and easing compliance for broker-dealers. The SEC also plans to propose a plan for rationalization of disclosures. The agency's core work includes laying out disclosure requirements meant to increase transparency and reduce risk for investors. And this is exactly what they should be doing instead of suing all crypto companies and killing innovation, which is what the previous administration did. Now, back to the charts, starting with the money supply. And the good thing is that the money supply is still trying to put in new highs over here, even though Bitcoin is still struggling. So hopefully this will act as rocket fuel for Bitcoin, because it has some serious catching up to do. The Fear and Greed Index is telling us that we actually reached some pretty fearful numbers down here, even 39. So when looking at the long-term trend, this is quite low actually, especially for the main phase of the bull market, which we technically are in, but not de facto. But when looking at the current numbers, we're pretty neutral. In general, I think a lot of people are disappointed in Bitcoin and they're quite fearful. A lot of them even think that the top is in and we're going to go down lower now, which is pretty good for a potential move to the upsides in the coming future. Now let's look at Google Trends. So I implemented some changes suggested by the chimp of our group, Dingleberry9. Yes, I actually said that name. So a big shout out to Dingleberry9. Anyway, let's go back to the charts. So, what can we see over here? First of all, the interest in crypto in general has cratered over the past few weeks, as you can see, even though some of these coins are very close to their all-time highs, especially Ethereum. So it's pretty interesting that now people all of a sudden lost interest in crypto again and think that we're going to zero. Also, this is telling us that we probably haven't reached the peak of the cycle yet, because the tops are usually at much higher levels. Yes, there are diminishing returns. This peak was at 100. This didn't even reach 75. But still, I would imagine that the next peak would at least reach 50. So this is also good news. When looking at the S&P versus Bitcoin, then you can see that Bitcoin's performance has been pretty abysmal, while the S&P is still making new highs over here. When looking at Bitcoin dominance, then you can see that it's having a small bounce right now at the 100-week moving average. It had a similar bounce at the 50-week moving average as well. But this will likely be short-lived. I think that the altcoin season will continue for a little while longer. So the reason why it's bouncing right now is because Bitcoin is crashing very hard, which is making the markets pretty fearful, and altcoins are finally starting to sell off as well. When looking at the Ethereum to Bitcoin ratio, then you can see that that is also decreasing a little bit here. And I also took some profits last week. I sold off 50% of my Ethereum to buy some more Bitcoin. But I do think that Ethereum will eventually bounce over here and reach these levels as well. Now, back to Bitcoin. So as you can see, Bitcoin is selling off again after this bounce over here. We just have to hope that we won't be putting in new lows over here. That would look pretty bad. As you can see, our long-term trend line is not too far away anymore. So it'll be interesting to see what Bitcoin does over here. There's still a chance for an inverse head and shoulders. So that's something to look out for if we manage to put in a higher low over here. So when looking at the top projection, then it's pretty unlikely that we'll be reaching $200,000, even though anything's possible. So I would still be very happy with around $150,000 or more. If we don't even manage to reach those numbers, then that would raise some questions for the next cycles as well, because if the bull markets are so tame now, then it would also be difficult to reach $1 million, even if we followed the general power law trend. But that's something we can discuss in the next episodes on the Quantonomy channel, because I can show you some Monte Carlo charts over there. But for now, we just have to stay hopeful, and there's still some time left. We easily could still pump for around 3 or 4 months or so right now. You have to understand that this type of hopelessness that a lot of you are feeling right now is exactly what the market makers want, because they need liquidity to go back higher. And how can they get this liquidity? By having people who sell Bitcoin, of course. And actually, it's pretty interesting to watch how so many people are already predicting that the top is in. I think that's pretty ridiculous. The likelihood of that is probably like 10 to 20% in my opinion, but obviously we'll have to see. There's also a long-running RSI divergence over here when looking at the weekly chart, but these types of patterns can take a very long time to play out. So for example, we could still put in a lower high here when looking at the RSI while Bitcoin puts in new highs. And that's something we have to keep an eye out for. Anyway, let's talk more about this next week. This is Saverio speaking, and as always, thanks for watching. You guys know my stance on the importance of self-custody. However, there are situations where you need to use an exchange for trading or as a crypto on and off ramp. There are also plenty of people who should still reap the benefits of owning Bitcoin, even if they don't have the technical expertise required for self-custody or exchange-based trading. This is where today's sponsor, Caleb & Brown, comes in. There's nothing more infuriating than having your money stuck on an exchange and being met with an AI chatbot instead of real customer support, which is often lacking as exchanges try to cut costs. Caleb & Brown, based in Australia, solves these problems by storing your crypto in cold storage, eliminating hidden fees, and assigning you a dedicated broker to assist you personally. You can even call your broker to execute a trade for you while you're relaxing on a beach. That's how easy it is to use Caleb & Brown's services. Use the referral link in the description to sign up now.